Hello, financial fans. Had a little bit of stock market activity this past week. I bought more of VALE. I already owned some VALE and I bought more. And I paid on November 16th, 4 days ago, this being November 20th, and this being a Saturday, I bought Vale on 11/16 for $12, 14 and a half cents per share. And it did go down after that, and then it went back up, but it's still down from where I bought it. And I'm increasing my amount of Vale stock in my portfolio because it still looks pretty good to me for future activity when the pandemic ends. And I found four stocks here that one might consider. I'm not a financial advisor. And remember, any money you put into the stock market you can lose. But for those of us who like to follow the market and either buy, sell, trade, hold, or just watch the activity for fun, this is an interesting era. The pandemic has been an interesting era for the stock market, and we'll look at four stocks which look very appetizing right now. They look like something that I will consider, and perhaps you'd like to consider these four stocks for your portfolio or just to watch. And we will begin with CNQ. CNQ stands for Canadian Natural Resources Limited, and that trades on the New York Stock Exchange. $40.36 was the closing price on Friday the 19th of November of 2021. And we look at this column on the left, 2/3 of the way down, the 52-week range. $21.97 was the low, and the high in the past 52 weeks was $44.33, so it's closer to the high than it is to the low. And the average volume down there near the bottom of that column on the left, 3,105,387 shares trade on an average day. And we look further down that column on the left, and we see that the experts think this is overvalued, meaning they think the price is going to be going down before it goes up. We shall see. The middle column, third item down, PE ratio 10.27. That's a very nice PE ratio. I like that very much for an entry into a stock that I've been considering, and I'm certainly considering this one. The earnings per share, $3.93 each share earned. And then we look farther down, forward dividend and yield. That $3.93, that if that continues, that sure is easy to come up with $1.90 for the forward dividend and yield for each share. And that nets out to a yield of 4.7%, which is a good amount to be receiving for just holding on to that stock. And the 1-year target estimate, the bottom of that middle column, $49.42. That would be a very nice move upward if that should happen. Next, we look at Gilead Sciences Incorporated, symbol GILD. I do own this stock, and it went up nicely on Friday. Went up over 1%. And that does trade on the NASDAQ, and we look at the column on the left, 2/3 of the way down, 52-week range, $56.56 to $73.34, so it is also closer to the high than it is to the low. And look down a little further to see the average volume every day, 6,427,000 shares trade on an average day. And go down a little bit further, and we see that nice word undervalued, meaning the experts think this stock is heading upward, and this has been a non-performer in my portfolio for a long time, other than the nice dividend that it yields. The PE ratio, third item down the middle column, 11.75, which is good for a pharmaceutical stock. 11.75 is a very good PE ratio. And we look down about 2/3 of the way in that middle column, forward dividend and yield. It gives you 4%, a little over 4% while you're holding on to the stock while they're paying out this $2.84. And the earnings per share, very good, $5.84 per share for a stock of that price. That's a very good amount to be earning per share. We look down toward the bottom of that middle column, 1 year target estimate, $76.45. Another nice move upwards. Remember, I do own that stock. One Main Holdings Incorporated, OMF is the symbol. The stock closed at $49.36 on Friday, November 19th. And that's off more than 2%, which is a pretty big down day for any stock. And we look at the 52-week range, 2/3 of the way down the middle column, 52-week range, $37.78 to $63.19. So at $49.36 is sort of in the middle there. And the average volume, a little over 1,379,000 shares trade every day. And this one is also considered to be undervalued by the experts. We look at the PE ratio, third item down in the middle column, and boy, that looks nice, 4.7 for a PE ratio. That's very good. Forward dividend and yield, $2.80 you're paid for each share you're holding on to for a year. And right now that comes out to 5 2/3% for holding on to the stock. The 1 year target, $73 per share. That would be a big move upward. And the last stock we'll look at today, I think what it is saying there is a petroleum company of Brazil, but we'll go by the symbol PBR. $9.74, a stock that is trading at under $10 per share. That's nice. 52-week range, $7.06 to $12.38, so it's also kind of in the middle there right now. Average volume, 28 million, over 28 million shares trade every single day, and this is considered to be an undervalued stock, meaning the experts think it's on the way up. PE ratio, teensy weensy PE ratio, 2.62. It's amazing. I'm going to look into this one on Monday and see what's going on. Forward dividend and yield, you're getting 6.38% for holding on to it. And the 1 year target estimate, 13.33. Not sure what's going on in Brazil right now that would make this stock be so low. And the 1 year target estimate at 13.33 would be a nice move upwards. And this certainly is worth considering. And I thank you very much for watching.